Hey everybody, it's Will at VIP Mortgage. Time for your local lender update. Rates have been kind of bumpy the last week or so, and at the beginning of the week last week we started to see some recovery after everybody was worried that the Straits of Hormuz were going to be shut down. Since then, rates have gotten worse, and we've had very bumpy bond market activity because everybody has started to think that the straits are actually shut down, and the flow of oil, of course, has a major economic impact worldwide, and that's why it's affecting our bond market in the short term. In the long term, people are more concerned that if oil prices stay elevated, that'll cause some inflation, and we kind of know the story with inflation because we've been watching that for a few years now. That being said, there is oil moving through the Straits of Hormuz. The big thing that caused a lot of heartburn last week was the pictures of some oil ships that had been attacked by Iran. However, none of those were actually in the Straits at the time. They were in Iraq. They were not attacked by drones or missiles. They were attacked by speedboats. And so while that created a lot of headlines, got a lot of attention here in the United States, it hasn't actually impacted the Straits, specifically the narrow part of that passage where the oil from the Middle East mostly transfers through. And meanwhile, Saudi Arabia has moved some of their oil exports to the western side of the country where it's not impacted. So all of that to say, today we're seeing some recovery on the bond market after some relatively big moves in the wrong direction last week. We're seeing a recovery today, not enough to wipe out the bad moves last week, but we are seeing that happen because now people are starting to realize that the oil's not as in much danger as we thought. We're certainly not out of the woods. It's going to take a while for this all to shake out, but this is all expectation trading. This has nothing to do with actual physical oil flow. It's really how worried are people that it's going to get worse than it is now, and that's how the bond market works. Our expectations matching the real-time data, and if we change our expectations a little bit, can we make more money before the data catches up? So that's how it works. It will shake out. The bond market will come back to where it should be. The underlying data is still supporting at least the rate levels we've seen since the beginning of the year, maybe even a little bit better than that. And this week we'll get some new job numbers from ADP. I like those numbers better because those are real. The government numbers are an interesting conglomeration of estimates, and those are the ones that get revised downward later. So I'll be watching those closely, and of course the oil situation will impact things, and we'll keep you informed. Long story short, even with some of the recent changes in interest rates, we're not talking about anywhere close to where we were last summer, and we're not far off of where we were in November. So if you're looking at a house, give us a call, 719-232-7553.